Yes, good evening, ladies and gentlemen, and welcome to today's session. I think this is our first online CPD event for this year 2023. I think last year we had series of these events, and this 2023 we have a lot of very interesting outlined programs that we will be having for all of our members to properly equip our skills and try to remind us of the things that we need to do in our profession as accountants, and what we have to do always. We have to always be refreshed and be well equipped. Let me use this opportunity to also welcome all new members, people who recently qualified for the IFA membership, and thank members who have renewed their membership. Um, we are happy that you have taken that very good decision to continue to join the IFA. We are always available and willing to support you, grow your career, and transform you personally from where you are to where you are going to. Let me use this opportunity to also remind members who are yet to renew their membership that renewal is still ongoing. Um, we are anticipating that by end of this month, 28th, renewals may close, and there may be additional penalty for late payment if you exceed the renewal deadline. So let's try our best, and we understand that the system is quite difficult, but let's also understand the value that we continue to receive as members of IFA, and have the decision to change or renew our membership and stay. What we are building as IFA here in Ghana, we need the support of all of you to continue to grow and build partnerships together and achieve all our strategic goals. And because of that, I would advise that we all try as much as possible to renew our membership. It's very, very important. The IFA continues to transform and continues to envisage bigger and better opportunities for all members. And because of that, we advise that so long as we continue to grow and expand through partnerships, grow and expand through CPDs, grow and expand through member activities that create more opportunities for us all. Let's all try as much as possible to meet the renewal deadlines, which is closing at the end of this month, to avoid any form of penalties and cost of reinstatement if possible. Yes, today we just began this year, and from latter part of last year to the early stages of this year, we have had series of changes to the tax regimes that we have as practitioners, focusing more on assisting the small and medium enterprises. We have to keep ourselves abreast with current issues so long as tax is concerned, so that we'll be able to give very good counsel and very good advice to our companies, our clients, ourselves, in whatever environment we find ourselves in. Because of this, we try to put this CPD event together as a way to remind all of us of the current changes in our tax system in Ghana, and also update us on what is going on and the way forward if we have to continue to use tax system in all our business and client dealings. Then we have to keep ourselves updated. We understand the importance of compliance to these tax systems, and the importance of getting the figures, the percentages, and all about it right. And because of that, we have organized this particular session. We have with us Julius Jima. Um, Julius is an IFA member and also a council member of the Institute of Tax Ghana. It's a Chartered Institute of Tax. And we have him here today to give us a briefing on the recent tax updates that we have received for this year. That's we all have to keep ourselves abreast of it. Yes, Julius, welcome. I think you informed me that you are having some issues. Do you mind if I share your slides for you? Your mic is muted, Julius.
Okay, so you can kindly do that for me. I have.
That's fine. So, can you see the screen? Is it okay? Hello. Yes, Julius. There's
Yeah, so the screen is now showing up.
Okay, that is fine.
Can you hear me?
Yes, it's audible from my point. Yes, so Julius, the floor is yours.
All right, so a very good afternoon to us, all of us, IFA members, and then we are once again welcome to our tax series in Ghana. I think that this is our second time, and then this is our second meeting, and I'm going to be your resource person for today. As Christian has already introduced me, currently I do more of economic policies and then fiscal policies in the country. So I'm honored and glad to have been given this opportunity to contribute to this discussion this afternoon or this evening. To the point, we are looking at our recent tax updates in Ghana. And then that is our topic, proud knowledge in taxation. So I don't want to go through the definitions and then all that, but for the simple reason, tax is just obligation that the state impose on individuals and then businesses. They are obligations, and then you are supposed to pay. So they are just charges, monies, levies, rates that the government impose on its citizenry to be able to collect some form of money to be able to meet government expenditure. But as we all know, tax goes with the economy. So we can't talk about taxes without looking at the economic indicators or the macroeconomic variables in the country. So I'll quickly go on. Christian, the next slide, please. That's right. So before we look at the recent tax updates in the country, bear with me and then travel with me with our discussions. And by the end, or maybe by the time we are done, we are going to follow through all. Now, in Ghana, our taxes are regulated by our national budget. So each day in or each year, anytime there's a budget presentation, there is some form of, tax policy or fiscal policy, as well as economic policies in our budget. So that is the source document or the legal document that we follow as economic or fiscal policy analysts to be able to ascertain the direction of taxation in the country. Now, the budget that we have in our country looks at economic policies and then budget statement. So it's actually budgeted statement or economic policies of the government. So they are in two folds. We look at the economic policies, then we look at the budget statement. As we are accountants, we know that when it comes to budget, it is revenues and expenditure. So we are looking at resource allocations or resource mobilizations, and we are looking at how we spend those money. So anytime you are budgeting, you are looking at how you are going to raise the monies and how you are going to spend. As we all know from management accounting principle that budget is just a plan of action quantified in monetary terms. So just as for central government, the public financial management, the Minister of Finance to present a budget, to the entire country. And this is done at the beginning of every year in November. So in the budget, there are two legs. We are looking at the economic policies. We talk
Yes, Julius. Julius.
Can you hear me? Yeah, can you hear me?
Yes.
Right.
Yes,
Okay.
I think there are some fluctuations with your bandwidth.
Okay, so I'm back online. I don't know if you can hear me.
Yes, I can hear you loud and clear.
All right. So, just pardon my insight for the network challenges, but it will be stable. So it's just my flaw. So the height is not helping me, but it will be very stable. So we are looking at economic policies, the budget statement, year in, year out. Government imposes some form of taxation, either by reduction in the rate or by increase in the rate or by introducing a new tax type in the country to be able to collect some form of money to be able to meet government expenditure. So the third point is that we'll be looking at the revenue measures, and the last part is the expenditure. But because we are talking about taxes, as we know, that taxes is just, the key revenue stream for government. So we'll be focusing more on the revenue measures and then the revenue side. The next slide, please. Christian, the next slide. Okay. So we are looking at the economic policies as well as the macroeconomic indicators. Just as I said previously, that with the budget presents us with facts and figures on the economy, and then as well as the budget statement, which includes revenue and then expenditure. Now, just to look at the economic policies or the macroeconomic indicators, these are the indicators that we use or we assess the performance of the economy. At the beginning of 2022, government was predicted or targeted or estimated that the overall GDP, and we know that GDP is the value of an economy, is just the aggregation of goods and services that we produce in the country. So at the beginning of 2022, since it's a budget, it's just an estimate. So government has to tell us, how he's going to grow the economy from where it is to maybe a greater number. So we assess or we measure the performance of the economy using the GDP, which is the gross domestic product. Now, the overall GDP of our country for the year 2022, government was looking at growing our economy by 5.8%, and then the non-oil by 5.9%. Now, end period inflation, government was looking at targeting inflation at 8%. Now, why 8%? 8% because in the previous year, which is 2021, actual inflation was 7%. So it stands to reason that if we are going on to the next year, which is 2022, then if government is targeting 8%, at least it makes some sense, 7.4%. In Ghana, we know that we have a Fiscal Responsibility Act, which is a law which instructs government to maintain its budget deficit at a rate of what? 5% of your GDP. So anything above that, it means that you're overspending. Then another indicator that we look at is our primary surplus. So this primary surplus is just an account looking at the tradings that we have in the country. And then after everything, when government balances its books, what is left as a country. That one to government was targeted or was looking at growing at 0.1%. Another item, and this particular reserve, as the name goes, is an international reserve, which comes from the international trade that the country performs. So as it stands now, there's something we call a BOP support. Government is going to the IMF seeking for a balance of payment support. And the balance as a country, your import exceeds what? Your export. So when your import exceeds your export, that means that it will amount to a trade deficit. The reverse is that you have what? Trade surpluses. So this international reserve is just an account we export, the foreign currencies that we earn, be able to cushion our economy. That goes into what? That account at the Bank of Ghana. And of course, we are talking about growing the GDP by 5.8%. What is our nominal GDP? Which just represents the value of our economy. So in Ghana, our economy stands at, as at end period September 2022, the value of our economy is standing at 502 billion plus, and that's the figure. So in dollar terms, if we take the dollar by 10 per 10, it means that our economy is just about $5 billion. Then our public debt stock, another key indicator that we are looking at, how much we have accumulated debt in terms of borrowing. That is also standing at what? 75.9% of our GDP. So if you do the math, our public stock as at end period September 2022 was standing at 467 billion Ghana cedis, which is just equivalent to some $40 billion. So the question is that as it stands now, our public debt stock has exceeded our GDP, and which simply means that as a country, we are highly geared, or in terms of equity, we are very low or negative. Please, the next slide. So having looking at the economic indicators, the target for 2022 at the beginning of 2022, and we are looking at what? The budget revenues. Like I said, at the beginning of every year, government has to bring us the estimate. So what are your estimates on what? The economic or macroeconomic indicators, and then what are your estimates for the budget? And the budget, we are looking at what? Budget revenues. So at the beginning of the year, or at the time the 2022 budget was presented, okay, which was done in November 2021 per the law, the budget revenues that government was anticipating was 100.5 billion, and that is represented as what? Total revenue and grants, and those are the figures. Now, we know that tax forms about 90% of government revenues. So when we are looking at government revenues, the items that we are looking for is tax revenues, plus non-tax revenues, plus other revenues, plus grants. That will give us what? The total revenue and grant. So when we break it down, the key thing that we are looking at or we are interested in is in the tax revenues. So the breakdown is the taxes on income and property, taxes on domestic goods and services, taxes on international trade. There is some tax refunds, social contributions, non-tax revenues, as I have already indicated, and other revenues that the government also gets as a result of maybe trading. Those will give us our domestic revenue. So when we're talking about domestic revenue, we are looking at all the tax revenues. Then we add non-tax revenues plus other revenue together with grant to get what? Total revenue and grant. So that is the breakdown. At the beginning of 2022, government was anticipating that it's going to make some 100.5 billion Ghana cedis. So that is the figure represented by way of what? Budget revenues at the beginning of what? 2022. The exercise or the discussion we are having is that since there is budget, there will be actual performance. And when we compare the budget to the actual performance, that is where we will see the shortfalls and why government imposes taxes or why government brings tax updates. So that is the angle I want us to get. So that is the figure for our budget revenue at the beginning of 2022. Next slide, please. Yeah, so like I said, we are looking at revenue. So I didn't break down the expenditure pattern. Maybe in our subsequent discussion, look at the expenditure. So Since there is a budget, we've seen the budget revenue, and then we are looking at the total expenditure. So the total expenditure is also represented by some 135 billion. So if we do the math, when we less the expenditure from the revenue, it means that there's a deficit of some 35 billion, right? So this is just the figure for expenditure. Next slide, please. Yeah, so once you have an expenditure of that amount, the question is that, what are you going to do, or what are the measures that you are going to do as a government to be able to rake in the revenues to support your expenditure? Because already your expenditure is far in excess of your revenue. So that will introduce us to what we call fiscal policy measures or tax policy measures or a resource mobilizations, how you are going to mobilize money from your economy. So the key thing that government did at the beginning of the year 2022, we are still in 2022, we'll come to 2023 so that we'll just link it up. So in 2022, the fiscal policy measures that government introduced in the system was approval of the tax exemption bill, now passed into law. Now, somebody will ask, what is tax exemptions bill? Now, in the main taxes that we have, both the income taxes and then the indirect taxes, almost all the tax types that we have in the country have some form of what? Exemptions. So when we come on income, there are exempt clauses in the income tax. That is income that we earn in the country and it is tax-free. On the other hand, which is the indirect taxes, especially when we take the VAT, which is what? The tax law looking at supplies in terms of supply of goods and services. There's also an exemption, clause in it, which looks at giving some exemptions to some supplies that we make in the country. That is what we don't charge VAT on them. So there was a discussion on it that there are so many exemptions in the system where government don't get the exemption bill, which will harmonize the exemptions to one document so that it will not be like we are giving more exemptions to people or to individuals and also to businesses, so that government don't really achieve the revenue target. Again, the fiscal policy measure government was looking to rake in the revenues was having for that in Ghana, we pay property, the MMDAs, and the district assemblies. So if you have a property in a particular geographical locations, you are being regulated by the local authorities. So you pay property rates by way of having, a residential premises or a commercial premises or a commercial rental establishment together with your business operating permit. But this property rate is what administered and collected by the district assembly. So when it comes to accountability, it was very low. One of the things that government was looking at is to make sure that those property rate will be brought into the arms of the Ghana Revenue Authority, which is the administrator for taxes in the country. There's one policy that government look at, restoration of benchmark values at the port. Now, what is benchmark values? Benchmark values are just some reductions in what custom duties at the port. At the time, there were a lot of importers bringing in containers at the port, and they come to the country, but people are not able to pay the duties because of high duties in the country. The government introduced these benchmark policies to reduce the duties that is paid at the port so that importers and businesses will be able to have the opportunity to clear the containers, and in doing so, they contribute some form of taxes for government. So government restored the benchmark value. So it's simply a reduction in custom duties. Now, government introduced the famous, or you can call it the infamous e-levy, which was looking at imposing some kind of taxes on our digital space. And then we saw the discussions, parliament agitations, and then, the back and then the forth of it. So additional is zero-based tolls. At the moment, if you are crossing any toll in Ghana, you don't pay any toll rate on it. Another revenue stream of policy resource mobilization government was looking at is review of the fees and charges we have in the system. almost all state institutions or state-owned enterprises have a uniform, fees that they charge. Like if you go to the passport, services, or if you're looking at the passport office, when you go, there's a fees fee that you pay. Like the universities, they have a fees fee that they pay. So all these are fees and charges act that government review them to be able to increase them to reflect current economic conditions. Another thing government did was also to introduce RACE, which is Revenue Assurance Compliance Enforcement. And this is just a unit under the Ministry of Finance, created by the Ministry of Finance and a GRA to be able to have some of, compliance system going around checking people, individuals to be able to pay their taxes. Another thing was the VAT flat rate. The threshold was increased from 200,000 to 500,000, which is that if you're a business and then your turnover is 200,000, that is from 0 to 200,000. It means that you have to issue a VAT at a rate of what? 3%, which is the flat rate. But now they review the law and then increase the threshold to retailers in the business sector who has annual turnover exceeding 500,000. And this is a way to bring in some revenue. Already, the government has given us an indication that the budget deficit is what's represented by some 35 billion Ghana cedis at the beginning of 2022. Next slide, please. Right. So in the mid-year, once you introduce your budget at the beginning of the year, which is read in November of the previous year. So 2022 budget was read in November 2021. Now, when you present your budgets I have already said that their estimates, their targets, their forecast. So you go through the year before you look at what's meeting all the indicators. Now, if you compare the mid-year review, what happened in 2022? In 2022, there was a global pandemic. There was Russia invasion in Ukraine, and even coming from another pandemic, which is COVID, this really impacted on our economy. So businesses were not producing enough. There was disruption in global supply chains by way of fertilizer. And Ghana, we consume a lot of fertilizer. Russia being one of the major exporter or the major producer of crude oil was fighting in Ukraine, and that really affected the supply of crude oil in the global space. And then as a country, we also consume petroleum products. So these two countries that we consume a lot of goods from their country, really, when the disruptions came, it really had a dire effect on our economy. So that's saw in the reflection of our economy as represented by in our GDP. So government realized that, look, all the indicators that I presented to Parliament, I'm not going to achieve them because there's increasing cost of living. We realized that most of our markets, when we're taking advantages of the system and they were just adjusting prices, inflation started galloping like nobody's business. The black market was controlling the exchange rate. So this really had a toll on our economy. Now, at the beginning of the year where government, projected that it is going to maintain an 8% inflation, in the mid-year, which is around June, July, current inflation was dwindling around 28.5%. So the indicators were not really good, which shows that our economy, was going down. Now, as I presented, the budgeted revenue at the beginning of the year, government estimated around 100.5 billion. So it is time to reason that in the mid-year, government was not going to achieve that target. So government revised the figure from 100.5 to 98 billion, but maintained the expenditure, having a fiscal deficit of 38.9 billion. So when we compare the figure at the mid-year to the beginning of the year, you will see some decline, and that shows the reflection in our economy. Next slide. So in the mid-year, then again, there was an revenue measure that or a fiscal policy that government was looking at to be able to make sure that they get in the money. The government introduced EVAT. Now, we already know value-added tax is just tax which government imposed on the supply of goods and services, but it was done in a more manual approach. So you have the manual invoice. Once you are registered for the purposes of the VAT, you are giving the manual invoice against your company invoice, then you counter issue the VAT invoice together with what? Your manual invoice. Again, government has indicated that it was going to increase what? The collection of property rate. So at the mid-year, it just stands to reason that government must enhance that policy to be able to make sure that the property rate system is really intact. There was also an extension of waiver of interest and penalty to December 2022. Now, this particular policy was introduced at the time of the COVID because at the period of COVID, businesses were not producing. So they were not be able to pay their taxes. So government was giving them some form of, an incentive to be able to encourage businesses to continue to file and pay their taxes. So, if you fail to file and you pay your taxes, the law imposes some interest with penalties on it. So there was a waiver of the interest and penalties so that business will be given opportunity to pay the principal amount of taxes. So that extension, that waiver was extended to the end, December 2022 to encourage more businesses to pay their principal amount of taxes. The last revenue stream that government did was introduction of an upfront payment of VAT on importers who are not registered for the purpose of VAT. So it means that if you're importing items from outside and you haven't registered for VAT, once you file your system or your document, your custom document, your goods, your next item. Next slide, please. So now, having looked at the budget, looking at the macroeconomic indicators and then the budgeted revenue and then the budgeted expenditure, let us look at actual performance of the economy. Now, the key thing is our GDP. Government was able to grow the GDP, by 4%. Again, non-oil GDP represents 5.3%. And the big, elephant in the room is inflation. Inflation had galloped year in, month on, and currently inflation is doing around 53.6%. But there's a cause to why inflation is keeping going higher and all that. And like I said, as a country, we are import-driven economy, or we are heavily dependent on what? Import. So all the time we are chasing the dollar. So we have to take plenty cities to take few dollars. Most of our businessmen are importers, so they only bring in the goods and sell. We don't actually produce the goods here. Those that we produce, we just add little value. So it does not bring in that value that we need in our economy, and that will translate to what? Inflation. Currently, it costs government between $300 to $350 million to be able to import refined petroleum products into the country. So government needs a dollar. Then again, it is costing government some $1 billion annually to give us sustainable power. So even as a government, if you don't do anything at all, you have this dollar pending on you to be able to supply what into the system, to give to individuals, businesses to be able to import goods into the country. Without that, we are going nowhere as a country. So the discussion is that every effort should be targeted at making sure that we do import substitution so that we begin to export and create the value that we need. And that is the way to be able to turn over the fortunes of the economy. The next slide, please. So if you look at the actual performance of the economy in terms of the revenues and the expenditure, yes, actual revenue really amounted to some 65 billion. As I've already indicated, if you follow the pattern, at the beginning, government was targeting 100.5 billion. In the mid-year, government revised from 100.5 to some 98 billion. But actual revenue and grant is actually what? 65 billion. So there's a total sharp decline from 100.5 to 65, which is representing actual figure. Now, when you look at the expenditure too was what? Hovering around 109, and that is the actual expenditure, leaving an overall fiscal deficit of 44 billion. So the 44 billion, our public debt stock, once there's a deficit, one of the ways to finance your deficit is either to impose taxes or you go and borrow. And over the years, government has been borrowing from the Eurobonds and then from bilateral, multilateral organizations. And that is what we have popularly in Ghana here, why government is doing the debt restructuring and making sure that you'll be able to pay or meet the interest that is paying on the debt. So our public debt development still stands at 467 billion Ghana cedis at end period September, but as 175 billion Ghana cedis, which has even exceeded our GDP. So that is not good news as a country. But when we break down the debt, domestic debt out of the 467, domestic, that is the monies that government have borrowed from our local markets, is representing 195 billion, and then the foreign one is also representing 271 billion Ghana cedis. So next slide. Okay, so now we have seen the actual performance in 2022. So we are in 2023. What happened? So government has to go through the same presentations again, present the macroeconomic indicators, present what? The budget statement, which is budget revenues and expenditure. So Christian, let's go to the next slide. So when we look at the budget statement for the year 2023, government is looking at what? Raising 143 billion. And the government is also looking at spending 205 billion, leaving a fiscal deficit of 61 billion. So the question is that what will government do to be able to finance the deficit of the 61? And like I said, is that you impose tax or you go and borrow? So the simple reason is that government raises revenue from taxes, and if you don't want to keep so much obligations on your citizenry, on businesses and individuals, then you have to look at the option of going to borrow. But the question is, do government really have the fiscal space to go and borrow? We have just seen, the continuous downgrade of our economy by international credit rating agencies, which has brought about lack of investor confidence. And people don't really want to bring in their money because our financial position is not good. So we have to look at home solutions. What can you do internally to be able to raise in the revenue to finance your deficit or to finance your budget expenditure? And the big question is, it has to come through taxation. So the next question, the next slide, please. So what government did for 2023 is that government imposes some form of taxation, and that has brought to us current CPD on our tax, which is the recent tax update or recent tax development in our country. So in 2023, having presented a fiscal deficit of some 61 billion that particular amount. So the big question comes tax, and then we have tax on consumption. Government has proposed when it comes to our recent tax finish, we go to our indirect taxes and we look at those to be able to collect the monies in the system. So on the income, staying with me on the income, the first proposal on the tax policy is that government is going to review the upper limit for vehicle benefits, which currently stands at 600 cedis per month for car, driver, and then fuel. Now, what does this mean? In computation for chargeable income for individuals or for if you're an employee, now there are some benefits that you earn from your employment, and we call it benefits in kind. Aside your cash emolument, your basic salary plus your cash allowances, giving you your gross amount or your total cash emolument. In the computation, there are certain benefits that are not cash. They are not cash in nature, but you receive it in the course of your employment. So some employment, you are being given a vehicle benefit, which is a car, a driver, and then the fuel. So we call it benefits in kind. So if you have that privilege or if you have that benefit, the tax law is looking at that benefit in kind and quantified it in some monetary and take some money and tax them out of that. Again, government have introduced an additional income on the tax bracket of 35%. This was previously introduced in 2018 and withdrawn same year, December. So we have graduated rate system of determine our taxes for individuals. So in the graduated rate, the last band is 30%. Now government has brought in an additional 35%. So It is starting from 0 to 5 to 10 to 17.5 to 25% to 30 to 35. So this particular 35% is targeting the high net worth people, those who have a lot of money and there are excess funds in the system. Government is going to take more from them. The next revenue proposal or the revenue measure government is going to do to be able to meet or finance that budget deficit of the 61 billion is what we call the National Fiscal Stabilization Levy, which will be converted into Growth and Sustainability Levy to cover all entities. So what is Fiscal Stabilization Levy? This Fiscal Stabilization Levy is a form of taxes imposed on certain companies or certain industries to be able to cushion the economy. So at the moment, those who are contributing to the fiscal
Julius, I think you may have to reposition your device.
At the banks, and then 5% on their profits before tax. So it's like the period is almost elapsing. That would also be contributing. And then the category B people are the extractive, the mining sector. The next slide, please. Yes. So the next slide. Right. So the final presentation or the slides we are looking at is the indirect taxes. Now, with regards to the income taxes, Parliament went on recess, so they haven't really sat down to look at the law and pass some of them into law. But those that has already been passed last year before Parliament went on recess was the indirect tax reforms. And the key amongst them is the Electronic Transaction Levy Act, which at the beginning, the rate of tax was 1.5% on value of transactions. So if you are sending Momo over an electronic medium, government brought in the e-levy, which was for taxing 1.5%. And then they give a threshold that transaction after the first 100 cedis per day. But at the moment, the rate has been reduced to 1%. And then they have also removed the threshold, the daily threshold of 100 cedis. So for now, every transaction you do on the digital space, whether you are using mobile money or you are using any transfer from the bank, you've been attracted, a 1% tax on the transaction. The second part is that excise tax reform, including the revision of taxation of cigarettes and tobacco. We know that excise taxes are some form of taxes that is being imposed on certain goods and services that are harmful in the country or they are harmful to the citizenry. So tobacco or cigarettes are products that when you consume, obviously is going to affect your lungs and your liver. Therefore, government is going to review and probably increase the taxes to, actually punish people from going into the production of such harmful products. Again, government is going to increase excise for spirit above that of beers. Okay, so those doing hardcore or hard alcoholic beverages, government is going to increase the taxes on that space as well, just to deter people from going into the production, because once people consume it, it's going to have some harmful effects on their system. That will also, bring in some money to government. The last part is that government is looking at taxation of products such as electronic smoking devices and liquids, which are not currently taxed. So this that we popularly know as shisha, those of us that we are familiar with the system, shisha. If you go to our pubs, our restaurants, and our clubs, you see people, smoking using the pipe or that machine that they use to smoke and all that. Government is focusing on imposing some tax on it. And the key amongst them is the almighty value-added tax, which is VAT, which at the moment, the rate of tax has been increased from 12.5% to 15%. So I have highlighted, Electronic Transaction Levy Act, and then the VAT. I have bolded because at the moment, those are the taxes that have been passed into law. So we'll quickly take a look at those two, taxes, and then we'll end our discussion. So the next slides will be on how the e-levy act amendment looks like.
Julius, let me share that one also. I think that one was in PDF.
Yes, that one was on PDF.
Yeah, let me share that one quickly. There are a few questions. I think we will answer them briefly. Then.
Right, so this is the Electronic Transfer Levy Amendment Act. This particular act has been passed into law. So it's actually very simple. We are looking at section 1, section 3, and then section 10. So Christian, if you can go down for that's right. So if you look at section 1, it is saying that the Electronic Transfer Levy Act 1075 referred to in this act as a principal enactment is amended in section 1 by the substitution for subsection 1 of, if you look at subsection 1, it is saying that there is imposed by this act an electronic transfer levy of 1% on electronic transfer. So if you go back to the main act, okay, the main act was having the rate at what? As 1.5%. So now this amendment number 1, which is the Electronic Transfer Levy Act 2022 Act 1075, has come to repeal the existing one, that particular section, and introduce, as we speak now, if you transfer money over the Momo or over mobile money, there is some 1% deduction that is going on instead of the 1.5%. And this one, the threshold of the 100 cedis has been also been abolished. We said, just come drop down for us. So if you look at the filing, it is saying that the charging entity shall file in respect of the e-levy to the Commissioner General, as we already know. And then the payment is also done by the charging entity, which is the telcos or mobile money service providers, which is just our networks that we have. Again, the last part is that is the agent, just defining the agent. Can you come down a little? All right. So that is just the amendment that was done to what the e-levy act. So it is just focusing on the rate, which was brought down from 1.5% to 1%. And it's as just simple as that. So that is the key tax amendment that was done to what? In 2022. Let's look at the VAT, that we can draw the curtains down and then take some questions. So on the VAT, certain sections of the Mother Act was also amended. But the key one that we are looking at, so yes, your hand. So Christian, we are looking at section 3. Section 3 actually is the rate of tax. We're looking at section 5, section 22. So if you look at section 3 also, which is clearly defining what has been done, can you come down a little bit for us? Where the rate of taxes? Right, so that's okay. The rate of, yes. So the rate of tax, which is section 3, previously it is 12.5%. So this amendment number 2 has also come to amend the rate of tax, which is the VAT, saying that except as otherwise provided in this act, the rate of tax is 15%, and it's calculated on A, the value of taxable supply of goods and services, and B, the value of what? Import. So this is clearly also defining the amendment that has been done to the VAT Act. So now at the moment, VAT is what? 15%, but you don't calculate the 15% straight away. That's why the law is defining or telling us something we call value of taxable supply. Now, value of taxable supply is also defined in Section 53 of the VAT Act, which actually define that the value of taxable supply is the value of the goods and services together with all duties and levies, but excluding what? The tax. And the tax here means what? The VAT. So before you can compute what VAT, you must what? Look at the cost of what? The goods and services, add all duties and levies on it, add it back before you compute your what? Now your 15%. So in Ghana, we have what we call Get Fund levy, NHI levy. At the moment, we have COVID-19 levy. So we add all this, levies. Get Fund is 2.5, COVID-19 is 1%, and then NHI is also 2.5. So if you add it, you are getting 6%. You add the 6% to the cost of the service before you compute your VAT of what? 15%. So the addition of the cost of the services together with all duties and levies is what the law is defining as what? Value of taxable supply before you compute your 15% as for the VAT. So now what is happening is that this is going to increase what? Revenue for government, because just the revision upwards in the rate to 12.5 to 15 is what? Giving government some extra what? Monies that we have in the system. So Christian, the slides are available, everything is available. I wish to draw the curtains down, and I believe that I've been able to highlight the key taxes or the key recent amendment. I've also taken us through the economy in terms of revenues, in terms of expenditure, why government expenditure is higher than the revenue, leaving room for a huge deficit, which must be financed either through taxes or either through borrowing. We've also looking at economic performance, looking at our GDP issues, our inflation issues, and then our international reserves, why they are depleting, hence the kind of economic crisis, financial stress, economic difficulties that we are going through as a country, of which government is what? Going to the IMF for a balance of payment support, which is represented by import exceeding our export as a country, and then be able to what? Maintain some form of what? Fiscal stability and then economic growth. So Christian, I thank you for the opportunity.
Yes, thank you very much. I think this has been a very insightful session. A lot of us have heard that tax rates have been adjusted, VAT rates have increased, but we have not had the details of it, and some of us are so busy to be able to go to look for that particular information. So thank you for wrapping it up for us. I think this is very informative, and all I would want to say is thank you. I think I'll take a few questions. If you have any question, you can open the Q&A section and type in your question. Robert, you may type your question and we'll read it out. So let's take this question from Isaac. He says that, my name is Isaac. On the subject of exchange rates, what do you advise? Should a company use BOG's end-year exchange rate, which is always lower, or must use the commercial bank rate to report its financial statement to the stakeholders outside Ghana? Secondly, is there any tax implication on this?
Okay. Can I take it, or you?
Yes. No, you take it.
All right. So Isaac Kwenu, yes, Isaac Kwenu. I mean, that's a fantastic question. The figures or the exchange rates reported by Bank of Ghana is simply, transactional, exchange rate, or those are the averages over the interbanks. Now, you and I know that the figures or the exchange rate given by Bank of Ghana is, lower than what the commercial banks or even the forest bureaus are quoting. So it's very simple. Bank of Ghana, is selling, the dollars and the pounds and then the euros to the commercial bank at a certain rate. And then they must also make some spread or margin on that. So if you go to the commercial bank, it is relatively higher than what Bank of Ghana is quoting. So the point is that in reporting, I mean, for reporting, true figures in your financial statement, it is more accurate that you go with what the commercial bank rate. The commercial bank rates are what you cannot actually use to do your report, because those are the daily transactions that your bank is giving you. If you quote the Bank of Ghana rate, it is likely that the person that you are entering the contract into will not accept it. And then the person would be facing some form of exchange losses in terms of the exchange, or in terms of the buy and sell. The person will have some exchange losses. So it is more prudent. And as we know as an accountant, the prudence concept is that you do not anticipate profit. Rather, you make provision for all losses, provided they can reasonably be foreseen. So if you want to apply the prudence concept, it is better that you use the commercial bank rate so that you make that provision. In case the transaction goes through, the person will not come back and ask you that he's coming to apply for an exchange difference. So all the time, for you to safeguard your business, kindly deal with the commercial bank rate, so that you are free. And it is obvious that they are relatively higher, because they also get the dollars from the central bank at a certain rate, and they must also make money, just as like the forest bureau, just as the black market. So, but Bank of Ghana is the regulator. Bank of Ghana, do price control. They do the exchange rate control. So they have a role that they play, but they sell the dollars to all these financial intermediaries who are in the sector. But in reporting, kindly use the commercial bank rate so that you save yourself the stress of either the supplier or the person that you are entering the contract into coming to apply for and exchange losses and the exchange differences here and there. Then again, you are looking at tax implications. So the tax implications are also enormous. Why am I saying this? For instance, if you enter into a contract to supply an item and then you are paying the supplier, if you use, Bank of Ghana rate, obviously, in computing for the contract sum or the figures that will be agreed to enter into the contract, if you use BOG's rate, it is going to affect the overall contract price or the overall contract sum, which will affect the VAT computations, as well as affect all the other levies computation, and even affect the withholding tax computations as well. So if you use the commercial rate, it means that you are using a more reflective rate, which will also affect your VAT computations, because obviously you have to convert everything into cedis. There is a law called Specialized Deposit Act, which saying that we are supposed to put every transactions in cedis. So no matter the exchange, no matter the transaction, if you are doing it in dollars or in pounds, once you are doing the supply in Ghana, you must quote it in cedis. And in quoting, so you have to either use the sell. And in this rate, all the time, the sell is higher than the buy, okay? Because the sell is what the banks will offer to you, and the buy is what they will buy from you. So all the time, what they sell to you is higher. So that is the rate that you are supposed to use. So the tax implication will affect on the supply that you are making in terms of VAT. It will also affect the withholding tax, because the gross amount of the supply has to be determined, and it will be the basis to which withholding taxes will be computed on. If it is good, you are doing 3%. If it is services, you are doing 7.5%. If it is works, you are doing 5% as withholding taxes. And then if it is the normal VAT, you have to do your levies, get fund, NHI covered, depending on the industry that you are operating. If it is a telco industry on the space of offering, there's a communication service tax, you have to add it. If you are in the tourism space or the hotel space, you also have to add there's this levy called tourism levy so it depends on the transaction. That is really what happened. But it is always best to use the commercial bank rate, so that you save yourself the stress of people coming back to apply for exchange differences.
That's fine. Thank you very much. I think this is very well answered. I advise that we use a Q&A section for our questions. I think our time is already fast spent, and if you have any questions apart from what has been asked here, I will share the email address of Julius, and then Julius, do you mind if I share the slides?
Yes, you can share the slides.
So we will share that one as well. And I think all is done. Thank you very much, Julius, for this very wonderful briefing. I think I have got my share, and there's much to learn today. I will entreat members to be taking active part in all our CPD events. In fact, it refreshes us and brings us to light on some of the better ways we can always do our stuff. Our next CPD event will be happening next month. I think I'll share the dates next month, and we'll be talking about emotional intelligence for accountants. We have already discussed that this year we have series of interesting CPD events, and I'll advise all of you to do well to take part. On Monday, I hope to visit our colleagues in Kumasi. So if you are in Kumasi and you will be available to have that lunch meeting, I'll be available to meet all of you in Kumasi on Monday afternoon. We'll share the time on our WhatsApp page. Thank you very much for this session. We are the Institute of Financial Accountants, and our main focus is to produce, train, and enhance accountants who are interested in working within the SME sector. And we continue to build more strength and progress towards that. A quick reminder to members on the renewals, please, if you are yet to renew your membership, don't hesitate to do it as soon as possible, because the deadline is fast approaching, and very soon you may be timed out or incur some other penalties which you wouldn't want to incur. Thank you all for coming, and we had a very wonderful session. Jonathan has been on the back end, and I want to say a big thank you to Jonathan and to Linda for this session, and we hope to see them in the next session. Hope to see all of you again in our next CPD event. If you have any information, any question to ask about the IFA, you can call me 0248 956 or you can send an email christiano@ifa.org.uk. You can visit the Institute website ifa.org.uk for all information. Have a good evening, and thank you all for joining. Bye.